Welcome back to Venture Unlocked, where we unlocking the playbook of founders, investors, and operators shaping the startup ecosystem. Today, guest is someone who truly embodies the art and science of building viable business. So let's welcome our guest. Hi, Surabhi. Welcome to Venture Unlocked, and thanks for joining us for this episode where we want to talk about how to build a viable business. So, first of all, thanks for joining me.
Hi, Shivam. Thank you so much. Thank you for inviting, and I'm happy to be here.
So, Survi, first of all, I like to congratulate for getting 5K, 50K in your LinkedIn. So, how that journey is like, how it went.
You chose the right word. It's journey indeed.
Yeah.
On 1st May 2024, I started writing every day.
Okay.
Until then, I was maybe writing 2 or 3 times a week, occasionally, once in a while, whatever comes to my mind, share that. But then I kind of knew before I had my offer and everything that I need to create a solid distribution. And then I'll
Yeah.
figure out what offer I want to make. So it started with that, and since then I feel proud about myself, forget anything else, that I've been consistent and I've been able to write the content on daily basis. So yeah, thank you so much.
Nice, nice. So let's start our conversation. So I just want to take your opinion on one thing before we start. And to just pre-build the conversation, I want your opinion on that side. What do you think? What is the biggest shift between the founder should be good at your craft or they should be really good at your business? So what do you think about this thing?
I think one without other is not going to work. So
Okay.
founder needs to be my journey, right? I mean, I always talk about engineer to entrepreneur. What
Yeah.
happened in that is we as engineers, we think that if I just make the product really, really good, if I make my customers happy, as in solve their real problems, a business will grow. But that's
Yeah.
not true. Projects grow, team will grow maybe, but the business won't grow. Growing a business is completely different skill set. It has so many different functions. And if the founder is not trained to develop these functions and really pay attention to sales, marketing, finance, audits, legal, customer service. All of these are different facets, team building, hiring, most
Yeah.
important. So many things founder need to learn beyond product development and beyond project management. And
Got it.
that's a very difficult part. So being good in our craft, let's say you're a great coder, developer, architect, for example,
Yeah.
but being good in the business are two different things. That's why when I work with founders, work is required, as in what are the skills? Anybody can learn those skills. It's not like a rocket science, and even rocket science can be learned today, but
Yeah.
anybody who can learn the skills if somebody identifies those skills for them. And that's
Yes.
the journey that we take together when I work with them mostly.
Got it. So, for my audience information, I just want to say you are engineer and entrepreneur, and then entrepreneur turned founders coach. So, how they can build their business and how they can make their business more viable or I can say valuable for their customer. Right. So, to going towards our next segment where we want to talk about what makes a business viable. First, I want to start with your philosophy. Your philosophy about. What about business aren't sold or are they are going to be bought? So what do you think about that thing?
So it's not my line. I think Reid Hoffman said that first, is
Yeah.
businesses aren't sold, they're bought.
Yeah.
So imagine even a single simple property that we have, right? If we
Yeah.
want to sell it, somehow we never get a buyer for it.
Yeah.
Somehow the buyer comes and then they give us a really bad offers, as in low ball.
Yeah.
But if we are not interested in selling it, but the property itself is so attractive that somebody wants to buy it, that's when you get a great price. You get
Got
it
it.
done on your own terms. Now, I mean, when I talk about make building a business which is valuable, I'm talking not in terms of only valuable to customers. Yes, they are one of the stakeholders. Employees are another stakeholders. They also would benefit if the business is valuable. But most important facet here is viable in the market, viable for highly valuable for investors or buyers, acquirers.
Got
So
it.
financial valuation, enterprise value is what I'm really referring here,
Got it.
not what you create in the world. Of course, without that being valuable, enterprise value is not going to come. We know
Got it.
today where companies are not so profitable, but they
Yeah.
are creating something, offering something of such high value to the market and industry that they are valuable in their enterprise value. So they are
Got
all connected in that sense. I don't want to get too technical here, but
got it.
most important aspect is basically enterprise value and how to grow it intentionally. Having great product, having great revenue is not enough. something more is required to make it actually enterprise high value business.
Got it. So to close this thing, if any founder want to understand what is the definition of buyable business, what you say in one line?
That somebody looks at the business and think that they are going to get really great higher return on investment
Got it.
for, and that should be very perceptible, that should be very much obvious to them, that
Okay.
if I put in X amount of money to buy this business or invest and buy some stock from the business, part of the equity, will I get much higher, bigger returns over a period of time?
Yeah.
And anybody would look for that.
Yes. So when you're saying anybody will look for that, so we can come to the core element of the buyers, what they are looking for. They're looking for profitability, they're looking for systems, enterprise, or value multipliers. Like, what do you think on this side? Like, what will be the first thing for them?
I will ask you one question before I answer this, okay?
Sure. Sure.
Let's say you have a AAA stock. I don't know if you trade in the stock market, but you understand a
Yeah.
little bit, right?
Okay.
Let's say there's a AAA stock which is of 10%, which is kind of promises you 10% return,
Yeah.
right? And there is completely unknown some stock, no
Yeah.
rating, no nothing, offers you 6-7% uh, returns on your
Okay.
investment. Would you even consider buying this
The
obscure,
triple
not known 6-7% return stock? No, isn't?
11. Yeah.
Now, if you are a buyer who wants to buy a business, you will want minimum return that
Yeah.
even market doesn't give you. Because
Got
the
it.
risk here is higher, right? A AAA stock
Yeah.
versus some company which is run by founder and some people. It could be great in revenue, it could be great in whatever, but if I'm not going to get more than 10% that market offers easily, peacefully, without me doing anything, would I even invest and would I even buy that? You wouldn't. So
Never.
why would one buy? First, the returns need to be attractive. I'm
Got
not
it.
saying if it is lesser than market, it won't sell, because there is need for different elements in the market. And yes, if you fit that bill, you may. But just basic, when you're building a business, look at it. Is it giving you 10% net margin? Better than market, wherever you are in geographical location, right? If not, do something to improve that margin first.
Got it.
Second, you buy 10% ROI with a AAA stock. Why AAA stock? Because you know that the company is highly governed by certain rules, regulations. It has its own merit, it has its own metrics, it has its own moat maybe, and they will beat the competition and they will continue to grow and not tank. That means my money is safe and I'm going to definitely, again, market doesn't give any guarantees, but we always look for those, right? And now if you're buying a company, buying a business, is it predictable? Will it definitely, surely give me returns in 3, 5, 7, 10 years, whatever number, right? Or will the competition eat it out and chew it out, right? Like,
Yeah.
all these things matter. So just imagine yourself as a market investor in the market. So you have to start thinking like an investor when you want to build a business which is viable. Not as a founder, not as a CEO only, but even as an investor, cap needs to come in once in a while.
Got it. Got it. Great insight. So, like, founder has to be prepared for this thing from their mid of journey, or what will the right timeline for them to start with this kind of preparation? Just because at the start, when any founder starts building, at that time their major focus is the product or the market.
Yeah.
And when they understand the market really well and they have the product demand from their side, at that time they start building in the bullish manner. Like, yeah, this is the thing, for that I can take a bet, and that will definitely give me returns when I'm building this thing, just because it give me a good product proposition and it will be a good value addition to the life of my target audience. At
Correct.
that time they are becoming very bullish. So in that mindset, when they are going in the single way, at then they're not thinking in this manner. At what will be the right stage? From there they have to switch their thinking. What do you think?
Good question, really good
Yeah.
question. Because right thing at the right time is the right thing, right?
Yeah.
Right thing at the wrong time is a very wrong thing.
Yeah.
So my answer always is, when do you really want to start having these thoughts and put in this intentionality in your building is when you have done, I mean, you're no more early stage. You
Yeah.
have a product market fit. You kind
Yeah.
of have figured out your GTM is showing results, and now you're in the phase of scaling up, right? Your team is growing from 10 to more, your revenue is growing, your customers are retained for a longer period of time. So the moment you realize that now it's time to scale up, that is the time you really want to become intentional about your valuation also. Now,
Got
in why I say this is because the moment you even want to reach out to your next level of fundraising,
got
also
it.
then the same metrics will apply, right? What's the valuation
Yeah,
of the company? And if
definitely.
your enterprise value is, if you're increasing it, you buy, you sell, you exit, you acquire, and you do whatever. The valuation matters. So I think the moment you realize that you're in the scaling phase now, you should start thinking on those lines.
Got it. So, as you talked about the valuation and all that things, so at the time of scaling, what they have to go for first, like about the valuation in the mind, or like they have to take care of the, I can say, top line sanity or that thing. So, what they have to chase at that time?
See, there it's like design principles, right? There's no right and wrong.
Yeah,
What applies to your own situation, circumstances, product,
got
industry,
it.
you need to select. But still, I will put it in simpler terms is chasing revenue, which is dangerous, is bad. Chasing
Got it.
revenue, which is more predictable, if you can choose, if you can negotiate your contracts, maybe slightly give a discount, but make it 3-year contract versus
Got
get a higher revenue and make it 6-month contract. You know what I
got
mean? So
Yeah,
the predictability matter. The keyword here is predictability. The more longer you can project with lot more paper in hand, numbers in hand, rather than in the dream version of it, right?
yes.
We will build a product and it's going to have this is my Santom, whatever, and then this is, but versus I have a contract which is
Yeah,
of 3 years. This business, this enterprise, bank or medical, whatever, health tech, this company enterprise thinks that this product is good and it is going to help them for next definitely 3 years. Gives
got
huge confidence. Even if you do a little bit, I'm not saying go in losses, but even if you let go a little bit of your revenue and therefore margin also, but you get a
Yeah,
long-term commitment, you get like I always say that you get a spine to stand straight, to not bend, not compromise on so many things. You have three
yeah.
years of assured income almost. So quality of things matter, quality of revenue matters more than just the revenue. So
Got it.
yeah.
So, like, I want to take some question from your personal journey. Like, as you are also a 2x founder, right now you are a founder's coach. So, in that side, in your journey, in your first time when you are doing this startup, how it went start, and at what time you are just in the thought ki, like now you have to move for the next journey. And when founders came to you, how many are in this kind of mindset? So we can just collab this kind of question, and just if you can collate this thing in the manner that will be good for the founders, just because most of the time founders when they start, as I said, they're in the bullish in the nature when they are building, so that will be really make sense for them and think strategically to take the decisions.
So in my case, my journey is slightly different. It wasn't like first business sold and then second business. There
Yeah.
was a time when I was running two business in parallel, and then the one that started later got sold first, and that
Okay.
was a complete sheer, again, businesses aren't sold, they're bought. Somebody
Yeah.
walked in saying that this is doing really well. I would, if you're interested, I would like to make an offer and buy this out.
Okay.
And I wasn't even thinking, like, okay, what's that? And that was my first experience of describing my business and its value, which was
Got it.
completely, I want to call myself as in almost like an idiotic experience.
Okay.
The way I presented my company, right? Because
Okay.
it was all about passion. It was all about what I'm seeing as future. And
Yeah.
he was an auditor. Show me the numbers. Show me why it makes sense. There was no expression on his face. And I was
Okay.
like, how do I crack this guy? Like I couldn't go beyond that. And then, so the first attempt failed miserably because
Okay.
the way my unpreparedness. And but the second time, lucky for me, another offer came for the
Okay.
same business. And that time I kind of did a little better. And maybe they really needed it also. So it worked out and I exited. But
Okay.
this learning was so potent for me that when I went back to my tech business full time, like not doing two businesses, but now I'm fully focused on growing my tech business again. At that time, I started looking everything from the angle of valuation. Will it increase
Got
the valuation? Will it decrease the valuation? If it is going to be okay, stable, I'll do it. If it is increasing, I'll definitely do it. If it is
got it.
going to decrease it, I won't do it. So that became a lens to take a decision going forward. And we offered services, but I know that services will have its own, ceiling on in terms of valuation. How do I make this better? So then you slowly start productizing your services because then it becomes a package, it becomes easier to sell. And those lessons were so critical. And life threw a curveball wherein I decided to exit. And life is so unpredictable in so many ways. One never know, right? And then I have also seen as a person, uh, we grow fast. Company
Yeah,
doesn't grow as fast, may not grow as fast. And then I've seen founders who are there for like 10, 15 years, and they no more want to do this work. They want to do something new, more exciting, and
yeah,
they don't know what to do with this business now. But for somebody who's starting new in the entrepreneurship world, maybe it's a great opportunity. It's an established business. They become CEO from day one. They have the revenue from day one. Their investment is only in terms of whatever they are buying in the business. To which also there are many ways to structure these deals. So you don't have to put in all money in one go, and you become an entrepreneur, and you become an entrepreneur of a successful business. So there are ways, right? And then, so you never know when you have to exit, when you
yeah,
may want to exit. So building it, uh, my personal experience and what I talk to founders today is, look, all of us are going to exit one day. 100% of us, isn't it? JP Morgan doesn't run the JP Morgan today. It was a
yeah.
person who created the bank. Gucci, we had a movie on that. The person who created the company doesn't have anything to do with the company today, neither the family, right? So all of us exit one day. The
Bill Gates
smart
is one of the
ones,
biggest examples that everyone knows.
the smart ones will actually plan for it and leverage it to their advantage. And when I say their, I'm talking about their employees, their customers, all possible stakeholders, not just put in money in your pocket kind of way. It's a win-win-win for everybody, even the buyer.
Got it. Got it. So, as you say, that's not in the hand of founders, but it came to them like as a like destiny. It's like if they met the destiny, they will really get the person who want to bought that thing. Okay. So at that time, I think no one is prepared. No founder is prepared for this day. Key from this day, I have to start thinking on this manner. So when this first time, when this kind of offer came to any founder, what was the feeling on that mind, just because they are building from their heart?
Yeah.
Founders always building from their heart.
Yes, I will answer this, but before that, I
Yeah,
want to just make a small, complete the previous question
sure,
part
sure,
that
sure.
I left out.
So please.
So the first time it was a luck, right? Somebody
Yeah,
walking in. But lessons from here, like how they valued or not valued my company,
okay,
when I took that to my tech company, I actually built that intentionally to become high valuation, not
got it.
thinking that I'm going to sell it one day. But if I'm building, why don't I build it high value, right? I mean, why
Yeah,
should I build it not high value? I mean, it doesn't, when you build a high value business, you build a robust business by default. Because
yeah,
what are you looking at? Predictability. You're looking at strong cash flow. You're looking at something that can be sold easily, right? Your sales team can actually replicate the success from past to future. Your cash is strong. Your systems are strong. The business runs on its own. Like there's a team and there's a whole the backbone that's set. It's not dependent on the founder. So all of these aspects, if you imagine 1, 2, 3, 4, 5, business is much more robust. COVID come and go, and if you're in the right industry, you
yeah.
will still survive or even thrive. So it
True.
won't shake you. And even if it is going to shake you 3, 4 months, you can easily sustain without blinking your eyes. And
Yeah.
that is important. So in my case, the first time was a luck. Second time was proper strategy in terms of how to build a high valuation. At that time, I actually went through the process of hiring a broker, having multiple deals in front of me, go through the due diligence, negotiate my bottom off, and then get the deal that I really wanted. So it
Okay.
wasn't luck at that time.
That's
Coming
a
back
step
to,
by step process.
yeah, yeah, 100%.
Okay.
And because now I was ready, right? This time I wanted to
Yeah.
do it. And I was systematic about it. Like I knew the steps to take and my strengths, my weaknesses, how to approach buyer, what to present, what not to present, as in nothing to hide, but what's more important rather than overwhelming them with information and my passion. Coming back to your question, and it's interesting. For me, even though my life situation was such that I thought that selling is good option for me, it took almost 4 months for me to say, yes, this is exactly what I want to do.
Got it.
Because the day I would think I should exit, some great project, some great opportunity would show up. And I would imagine, like, people dream of this, right? People dream of having business, having 200 plus engineering staff to work with, having these kind of customers and logos on their portfolio. Why am I selling? Why should I not continue? So,
Yeah.
and then I think I mentioned this before in some other conversation that the business becomes your identity. It feels like
Exactly.
this is who I am. I breathe, live, do everything with this business. I've grown up with this business. Who will I become if I if this business doesn't exist, So it's a very emotional, very tough decision to make. But by default, founders become, with practice, I think definitely we become more objective in our decision making. And for me, it was all by myself. Will I be able to grow it beyond a point? And I
Got
kind
it.
of felt maybe not. I didn't want to partner with anybody. I didn't want to raise funds from outside. And I thought if I give it in the rightful hands, then that team, that person will grow it, which my company and my employees deserve.
Got it.
They should have their career paths more bigger, longer. They should have more, better work to work for. And that's where I kind of made it as a very, I want to say altruistic, but there was a selfishness because I'd done it for 18 years.
Yeah.
And then I kind of felt, I think I want to do something different.
गॉट इट। सो
So
ऐसे होता है आपके साथ में कि लाइक कोई एम्प्लॉय आपके पास वापस से कॉल करके बोल रहा है मैम दे आर नॉट ट्रीटिंग अस इन दैट मैनर जैसे आप ट्रीट करते थे।
ऐसा नहीं होता,
हाँ।
डिफरेंट वर्जन होता है इसका
हाँ।
because I really, from all the offers that I had on my desk, right, I really chose the right person and team.
या।
That person said to me that nobody will lose the job. If they were merging, they already have an entity which is very similar to my company. In a year's time, we will merge both of them. If we have excess, let's say my IT infrastructure department, right? We don't need that many people there. Their
या।
support. And it's a cost center in a way for us. But we will retool, retrain them, but they will not lose the job. I ensured that their gratuity till the time my period is paid in the in in the terms and conditions that we had. So I left it in a person, I mean, left it in hands where I had extreme comfort that they will take care of my people and this business better than I did, better than I could at that time. Messages come, conversations happened, is what fun we had. And now it's a little more serious, right? Because if somebody like my core team, I was really blessed. My core team was somewhere between 7 to 13 years with me.
ओके।
So we have been through so much, right? So many crises, so many happy moments, so many stupid things, so many
यस।
projects, so many pizzas. So that's the part, like I've grown up with them. They have grown up with, we have
या।
grown up with each other. So that's the fun part they miss. But if they would have gone to any corporate per se, that would have been the case anyways. So it's a good message, but it's nostalgic, nothing wrong.
Because in some podcasts I listen one line from Shark Tank wale investors ki
Yeah,
employee are not leaving the company, they are just like
yeah.
they are choosing the managers
Yeah.
or they are leaving their managers.
So I'll tell
So
you,
yeah.
if I'm not saying private equity is bad, but
Yeah.
but what happens is if a company gets acquired by private equity kind of a, their whole intention is to make more money than they have invested. Their
Yes.
intention is not to build, not to grow this. So
Yes.
what would they do typically? Their style of working, again, I'm not against them, but the intent itself is different, right? So what they would typically do is look at the entire company, look at different service line segments, the loss, not so profitable ones, not so strategic ones, get rid of them. Put in
Got
more money, pump in more money, acquire more companies, plug in those companies into the line where this company is making money, make it bigger, and then sell it to even bigger entity.
got it.
And that's how they get their money back. So their plan is come in 3-5 years max and get out with much
Got
bigger chunk. So that's their thing. And I was very clear that I don't want to deal with the private equity. So I wanted a
got
strategic buyer. And that was a very, so these are the things, right? When you're looking to sell, who you are and what do you want for the company when you exit is very important. So
got it.
if the founder is aware of all these aspects of their decision making process, they won't regret the decision. They will feel good about it. Like, okay, my guys have better careers today. That's a feel good for us.
Got it. So, before concluding this section, can we just summarize this thing like stage of readiness? As you told in your second time, you did like step by step.
Yeah.
So, what will be the step of readiness for founders when they start preparing for this?
See, you start preparing. Exit readiness is a journey.
Okay.
Exit is an event. If you
Okay.
want an Olympic medal, you start training God knows how
Years
many
back.
years ago.
Years back.
So, and because it cannot be done last minute. Yeah. So if you want a good exit, if you want a good pricing, if you want to have ability to choose your buyer and your terms, you should start as early as possible. And that would be, the moment you have your product market fit, you're growing now, you're scaling, you're stable in terms of your revenue, you're little predictable, now become stronger. in all those aspects, have a solid
Got it.
cash reserves, plans for that. So that's the entry point for thinking in terms of exit readiness, viability. From there, when you start, then there are indicators of a viability, right? How you want your revenue to be, your profit, your margins, your cash reserves, your cash conversion cycles, your CAC, your all these things matter depending on different business. If you're a SaaS company versus your pure services consulting company, metrics will change. So I can't give one answer to all of that, but for each business there will be some specific metrics that you should definitely take care of. 5, 10 numbers. You should know how that mix will look like, make it as a higher enterprise value company. So that's the second most important part. Exiting or not, that's a very personal choice. That is
Okay.
dependent on your personal life choices, at founders' personal life choices at that point in time.
Got it. Got it. So let's move to the next segment. Before and in that, I just want to talk about the market positioning and all that thing. So you build in India also. Right now, you are in Dubai. So what was the cultural shift you saw in the both the market in terms of a startup? What was the founder's mindset and all that thing? And early 2024 and post 2024, what was the shift you noticed in this market?
I think, I'll answer the second question first. Shift here now is the newer generation of founders are not coming in with the attitude of this is for life,
Yeah.
this is my baby kind of
Yes.
mindset. They are coming in because they want to build something, they want to prove
Yeah.
that to themselves and to the world what they're capable of, have a great validation of product market fit, and then be ready to give it to somebody else or bring in more people in terms of investors, VCs. So that's a mindset shift that I'm seeing slowly.
Okay.
15, 20 years ago, especially in Indian mindset, selling a business was a no-no. Why? It's a built it, I'm going to die with it. My family may not be interested, but I'm going to push it on them. That's how
Yeah.
we build businesses, right? And that's slowly changing because even kids are not interested. There's a whole study that says
Okay.
four out of five children are not interested in continuing father's business, and the one who is interested, then you think about if he or she is capable of running that business or not.
Got it.
You see, it's a but there's also more than 60% of founders who want to exit do not have any strategy of how to
Got it.
exit. So that's where the awareness is required that it's okay to think about this, and it's
Got
okay
it.
to build a business which somebody can buy and make it bigger or better.
Got it.
In terms of geographical location, we built everything in India. So my entire team, all of us were in India. We served UAE and US clients. And of course, when you work with US clients, I'm talking again 15, 20 years ago, they used to be a lot more methodical, a lot more project management discipline wise. Their code quality would be extremely high. Their testing process and the time for testing a product will be extremely high, and therefore put in a quality product outside, which unfortunately see in India even today lacking and missing. Today, Indian, even I would say, especially engineers, as in developers, coders, they want every 2 year a promotion. I want to become a team lead. And I have worked with 10, 15 year experience developers, so technically thorough. Don't really want to work for a designation and prove a point and jump the ship for every 100 rupees that somebody will give me, offer me extra. And you don't build careers like that. You don't build companies like that. So I wish Indian developers and tech, especially tech, I can talk about tech, would have little more stability, little more less expectation that job should fulfill everything in my life. If it is giving me decent career opportunities, yes. And I'm so not happy with this work-life balance taken to another extreme. I have worked 18 hours a day. My husband has worked like 25 hours in a day, I would say. Like,
I have seen a day. It's
uh,
like
uh,
whole day and next
yeah,
day.
yeah. I have actually uh, 3 days continuous is what I've experienced with him. And if you say that I will work for 8 hours and I'll build a company, I'm sorry, no, it's not possible. So you can have a integration of life and work,
Got it.
and you need to make this stronger, lot more stronger.
Got
You
it.
can't be a weak person and build. It's not for light-hearted. It's not for somebody who cannot
Over push them.
physically and mentally endure it. It's not for them. Entrepreneurship, yeah.
Like just not from this context, but what we know is a startup is not just just because of their founders, but the team they are working for that idea. With the successful startup, there will be a high valued individuals who are taking care of that their job, like that can be product management. So they are very responsible for their product in terms of how they build the product, what they can build, and for whom they are building. So they are owning that own piece, like from design, development, business, each and every point of view. So that's a high value creation for their founders. In terms of development also, you can say, if a
Yeah.
good developer, we can talk about the good developer, they are thinking like how to make a product scalable. So if any kind of changes will be come in future, their product will take very few time. If there any downtime is there in the product, they can make that thing in very less span of time, and they make it live if any shit happens on that side. So what will be the quality? Just because my audience is not only the founders but also the operators
Yeah.
of my age who are working with the startups and trying to build good things for the startup. So for them, I have this question: to be the high valuable, like what I can say, high valued individual for the founders, what kind of mindset shift they need to take care in this 2020, after 2024 wala shift? Just because 2021 tak market ka jo tha ki if you are doing some more than mid level work, you are getting the money, and everyone is switching on that side कि ठीक है पैसे तो मिल रहे. So to create the value, just because if any operator want to be founder or want to be a king layer operator who can support founder from their experience, they need one mindset of building like a founder from themselves, of managing themselves as an individual. They are also founder of their own life. So for that, what can be the valuable things they have to take care of so they can make their career like Virat Kohli?
Yes, it's a very deep question. Thank
Yeah,
you for asking. And I'm not sure if you will like my answer, but I'm still going to, as a coach, I have to give the mirror,
yeah,
right? So I have to say the truth from my side. If you, no matter what, let's say you're working for a founder, right? You're building a product. You're a product manager, for example. You're putting your heart and soul into it. You're thinking 100,000 use cases that are possible. You're trying to make the best of whatever is given to you. Now imagine you're working for, say, 12, 15 hours a day. Your founder doesn't appreciate you. Just giving you an example. I'm not saying
yeah.
your founder doesn't appreciate you. You don't get a promotion. You don't get
Yes.
a pay hike. Your team sucks. I mean, part of the team sucks. They don't come. They are not as responsible as you would like them to be, as much as you are responsible. You're training them, teaching them, and then every 1, 2 year they quit. So whatever you have taught, all of these are happening. And if I say that for next 5 years, you have no choice of quitting, will you do it? That's what founder is doing. Don't answer.
Yeah.
That's what
Yeah.
founder is doing.
Yeah.
No matter what, everybody can go, everybody can quit, not him or her. That's
Yeah.
the biggest difference. If you can show that skin in the game, if you can stay there, no matter, nobody's going and telling founder, yeah, great job.
Yeah.
He is not getting any pay hike, most of the time giving money, taking a pay cut if required when you're building something really and don't have any revenue yet. Everybody in the at home and the family is complaining that
Yes.
you're not available for us.
Yeah.
And they imagine the doubts and the frustration that you have when you sleep. Like, is it going to work? What if this guy quits? What if that client goes away? What if this investor says no tomorrow? All of these fear factors are there. He's a human. He or she is a human. And
Yes.
they are going through all of that. And they have no choice but to quit. Sorry, they have no choice of quitting. They have
Yes.
to stay. If you can do that, you're a great guy.
Got
And
it.
that's the real test. And anybody who wants to become an entrepreneur tomorrow, do this today. If you can do this and you quit after 4 years to build something of your own, you will 110% be successful.
Got it.
Because the product idea can come and go. GTM can happen, one door may close, second door may open. All of that can happen. Investor can say no, investor can say yes, team can stay, great team can come and go. All of this will happen. But if you can stay and decide that you're going to figure it out, you're going to figure it out, you're going to figure it out every day, then there is no way you're going to fail.
Got it. So that's the
So remove the option of quitting and then tell me if you can suffer through that. Then you will be successful and you'll be rich also, I'm sure.
got it. Got it. So the next question from my side is like when a founder is creating a team and they're in the strength of 15 to 20, and when they're scaling the company and they want more person, so there will be 3 to 4 kind of audiences they are getting. First one is the freshers, they don't know nothing. They want them to hire, groom them. They are giving them the high value and they want to stay with them for the long term. जैसे बहुत स्टार्टअप में देखें, like कुछ लोग रहते हैं 5 6 7 years, they are there, that was the first job, they stayed with them.
Yeah.
Some are like the hopping guys, they came to the company, they will see is there opportunity, it's the right thing for them, and then if right value is there, they will stay, otherwise they will go. The fourth one is, I don't care about anything, they are giving me right money, I will be there. At the day they are not able to give me the money I'm demanding, or the right thing I'm getting, they will leave. So at the founder, when they're scaling, and they will always get the mixed set of audiences, because at the first meeting or 3 to 4 round of interviews, not able to get their what their mindset is and how they are thinking. But when they onboard inside the organization, and that time, that's the founder's responsibility to give them this responsibility to them. Like you have to be responsible, just because everyone hearts get felt when they are seeing the effort of another person. That's the human law, and just that psychology says, like if I'm seeing someone is giving me, one day is like I have to stand for them. That's the human psychology, that's very basic thing, very basic trait. So how founders should groom these type of different set of audience when they are scaling, just because grooming their team is one of the undervalued skill that no one will talking about, but that's a really, like I can say, if this idea will not work, if you're going for next idea, if that team will really make sense for you, this team will stay with you, and like they're like, yeah, I will work with this guy, what will I doesn't care if I'm with this guy, he will give me the right environment and we can build and we can make money. So
Yeah.
what kind of takeaways founders should take at the time of building, and how they can pass on that responsibility, so everyone should be like the high valued individual, they can transform into that.
I don't have any bookish answer in terms
Yeah, I
of,
don't need booking, but the
build
bookish
a
answer,
culture.
just a
I'm
practical
not
answer.
that kind of a coach at all.
Yeah.
But in my own experience and what I always seen work is in a very basic fundamental level, intention matters. If founder's intention is to build this product and make all of us successful, and it is shown in a small little ways when you don't have money, and it is shown in a big ways when you have money. When the crisis hit, how do you protect your team in front of customers or in front of somebody who can actually say bad things to your team? How can you protect them at that time? All of these small little things build loyalties. And if I'm standing up for something, so my favorite leadership definition, if I may call it as that, is from book Good to Great,
Yeah.
where he talks about level 5 leadership. And there are only two qualities for level 5 leadership. First, extreme humility, and second is sheer resolve. In my own crisis, when situation was like, I don't know what to do next, I'm going to figure it out. What I did only and only was to show up, that I'm here, I'm going to do this. And that was the only signal that was required for my team. That confidence that she's going to do it. I want to be with her because, we are together, we can make this really great. And they carried me through that, not other way. And that intention of my sheer resolve, that we are going to figure this out. And also saying that I don't know all the answers, that extreme humility, both of them make you, if they can see you, that I think most of the time people will line up like you cannot imagine, and then they stay, then they go really above beyond. These rewards are like nonsense in front of what they achieve and deliver for you. And it's an amazing journey. Failures doesn't feel like failures because you're doing this together. So yeah, I think level 5 leadership is my answer. If you really understand that and really embody, not just talk, people can spot talking founder versus doing founder.
Yeah.
Yeah.
Nice. So yeah, that's a great thing for the founders who are listening to this podcast. That's a great takeaway for them, just because building a product and building a team is both
Yeah.
are very biggest part of
Yeah.
any
Like in the
entrepreneurship.
opening, I said, right? Building a
Yeah.
product is one thing, building a business is another thing. It
Yeah.
needs lot many more different skills. Yeah.
Yes. So, like, for this, if we just have to summarize this thing, like, what can be the walkthrough for the founders who are in the scaling stage, and then they have to plan things for them, ki, like, how they have to navigate for the next journey. So, what should be their playlist for them in terms of work?
Communicating with team, I would say even over communicating with the team is very important.
Okay.
Continuously keeping them in the loop and telling them what you're building, what you're suffering through, what you're trying to figure out, being really part of the team rather than them and team makes it little more easier. Commitment and resolve to the cause is extremely important and makes people line up with you. Yeah, it's not easy. You need a lot of you need good endurance. So yeah, look after yourself is also one very important thing because only then you can endure.
Okay. So like there are different kind of coachings and things are going on in the market right now. Like in internet, everything is there. And right now, ChatGPT is making agent of anything. So in that side, but there is also one market where founders are also stuck somewhere in the thing. And founders coaches are very rare. And if someone is there, the coach, some coaches don't have experience of being a founder and doing the thing. So when founder is feeling stuck, what do you think? What can be the first level of when they are getting the symptoms of like we need advice from someone and they're figuring out whom to talk, what to talk, and in which depth like we have to talk of it. So at that time, what should be the founder has to do at that time? Like they have to go for coach, they have to go for any friend session, or they have to go for their investors, or they have to go for any seasoned person. What should be the first thing when this kind of symptoms they are facing? Just because every founder have different kind of complexity they are facing, just because every
Yeah.
startup is unique.
Yeah, I know what you mean. And my answer to that is people typically do not think, oh, I need a coach. That's
Yeah,
not how you think, right? We think in terms of problem statement. So
yeah,
I would think a founder would think as I'm stuck. I mean, my revenue has not grown, for example, right?
yeah.
Or my team is somehow not, my retention is not great. Whatever the problem statement you're experiencing, right? That's the statement. That's the identification of problem, and know that there could be help available.
Got it.
And I can't speak for everybody, but for me personally, when founder comes with that problem statement, my way of breaking it down is basically I'm a thinking partner.
Got
I
it.
kind of make it easier for them to think through things. And benefit of me is because I have done this twice and built team and maybe 10,000 plus people have gone through me, right? In terms of coming, going, and customers to employees, all of that. I kind of have that quick understanding of asking the right question because of which the conversation kind of evolves. ChatGPT and all are good when you know the definition.
Yes.
When you have the question, it can answer. But in this conversation, you can tell me, Shubham, so many things that I've mentioned, I must have mentioned, which you have never thought of before. So if you have not thought of something before, how would you even put in as a prompt for ChatGPT to get that answer? So that's
Yeah.
where somebody whose experience comes in the picture. Being said that, I cannot claim that I know everything of everything. But
Got
my
it.
job is to tell them that this is the skill that you're lacking. That is why you're suffering. So let's find out a person who can help you build a skill set. Like few days back, I'm working with somebody who's been, I mean, for more than a year and a half now. And I've been telling him that you need a communication coach.
Okay.
And I'm not an expert. I mean, I'm more straightforward. I'm more saying what it is. But he cannot be like that. He needs to be little more, he needs to be different. And I'm telling him just do 6, 12 sessions depending on your need. Let's find out a communication coach, somebody who's expert into just giving you these tools and techniques, then
Got
better than me because they've studied that as a system, as a syllabus, and I'm not that. So I'm not saying I will have all the answers, but I will identify what skills are lacking, what is lacking, that if you just get that, you will be home free. You will be able to do better. And one coach may not be answer to all, but having a in-depth relationship built with somebody will help.
Got it. Got it. Yeah. So let's come to some fun segment. So let's do some light session about rapid fire. So are you ready for that rapid fire
Sure.
round?
I thought this
So
was fun already for me.
yeah. So not just for the audience point of view, just
Yeah.
because we are going more deep on that. So let's touch some angle where they can just take in seconds they get some something
Sure.
valuable. So what was the first thing you did after your first exit?
Sleep. Trust me, I did. Like for months, I thought I'm just going to, and I thought I'm for rest of life I'm going to chill. But of course, that didn't happen. But yeah, sleep.
Okay, so as per you, what will be the most underrated founder skill?
Underrated founders. Disciplined, structured thinking.
Okay,
I
can you just
want
elaborate
every
this?
founder or even every person who's really trying to achieve something in their
Yeah,
life. I would highly, if there's any takeaway, Shubham, from this
yeah, conversation.
episode,
Yeah.
I would say block specific time in your calendar for thinking.
Okay.
That's how we exist, that's how we do everything, but we never actually sit down that I'm going to think, do not disturb.
Okay.
Isn't it?
So, like that's a personal question from my side also. So, whenever I was thinking ki Sunday 10 to 11, I will sit for only just for thinking. I just sat there, and like at that time, we are in the dilemma, what I have to think. Can I saw my phone? Can I just change the channel, or can I just scroll the reel? So, at the time when you are saying about book cut slot for thinking, that's the true thing. I was also trying to make some time for thinking for 45 minutes or 30 minutes or 15 minutes in a day or anything. So how anyone can start with that thing, just because this thing is also very hazy and book is giving very boring answer, and when we start reading that kind of answer, we are getting lost.
No, no. So, see, you have to have a repository of problems that you want to solve or things that you
Okay.
want to improve.
Okay.
And I would bring it to daily journaling practice.
Okay.
If you don't want to, I mean, I'm not saying elaborate dear diary kind of journal, not at all,
Yeah.
but something that you felt really frustrated with today. For example, during the week, at least there will be one episode where you wish things were different. And it could be your founder not being happy with your work,
Yeah.
or something that you did, you knew that was a complete disaster and you should have
Yeah.
done better, but you didn't think through things, or
Got it.
something that you're feeling, say, absolutely burnt out, anything, even personal life, I would say.
Got
And
it.
if you have a repository of that, you can just, there are prompts. I mean, there are prompts that will make you write as you think, and writing is thinking. Therefore, you will have that segment dedicated to, okay, this Sunday, I will sit down and I will really think through this.
Got
Today,
it.
when I'm rattled, I'm frustrated, that's not the time to really look for a solution. You have to be in little bit alignment, you have to be little bit structured to really think if you really want to solve the problem. If you just want to whine, sure, go ahead and whine. But if you want to solve
Yeah.
the problem, you have to have a thinking time.
Got it. Got it. Yeah. So, write a whole week what kind of problem making
Yeah,
you think like you have
yeah,
to think more,
yeah,
and then just think about that thing in that one hour. Got
yeah.
it. So the third one is which one? Yeah. Yeah. So the third question of my rapid fire is, which is the your favorite book that you suggest everyone to read?
Gave you one, good to great.
Yeah.
And I would say, again, it's very situational, right? E-Myth was really eye-opener for me. And that book, again, taught me a lot about systems and how to build a company. And on a personal level, I think this book is written in 1912, called the Master Key System, which
Must.
actually helped me understand who I am and what is my own power and how
Okay.
can I really deploy that power to my greater good.
Got
And
it.
it's simply amazing. It's very complicated to read because of the language being old, but it's worth reading.
Got it. Third one is, which one is more fun, starting up or summing up startup? Which one is more challenging?
It's fun or challenging? I
Both.
mean, they're same, but no, you can't sum it up or wrap it up. You
So
can't
we can
exit
go for
without,
challenging now. We can go
you
for
can't
challenging.
exit without starting, right?
Yeah.
So one without other is not possible.
Okay.
Both of them, they have their own flair and flavors.
Got it. So the last one is how you can sum up your coaching in 3 words. What are the 3 words?
I need only one word, fun.
Okay. Fun.
So for me, the mantra is basically life is supposed to be fun. Business is supposed to be fun. It is always fun. If it is not being fun, then you need a thinking time where you need to see which part of this is not making it fun for me. And you have two choices then. One, somehow figure out how can you make this fun? Or two, delegate if you can. In my course also, Founders Freedom Blueprint, I talk about energizers and drainers. If something is draining you of energy, like imagine a graphic designer and accounts. I have actually experienced this, right? If you ask an accounts guy to do any creative work, he cannot do it. And if I had a graphic designer, she was brilliant, right? You tell her something, she'll come up with best of the
Idea.
visuals for it. If
Yeah.
you ask her to do anything with numbers, she will be like, what is this? So there is for her, energizer is this creative work. Numbers will drain her. And this accounts person, is energizer. He feels great. I get bored, but he feels great. And if you do any creative work with him, he will be completely drained because he can't use that side of the brain so much. So we all have these different energizers, drainers within us. So if something is draining you, you have two choices. One, learn this in a way. I talk about that also in the course, like how to systematically do this. And if not, figure out if you can delegate it to somebody who has this as an energizer. So yeah, fun has to be the most important criteria for everything.
Got it. So the last thing, if any founders want to connect with you, or they want to discuss things with you regarding their startups and all, so what can be the medium they can reach out to? And the last one, the fun part is, if any you have 30 seconds with the founder, what kind of advice you are giving it to them?
So I'll answer the second one. Like I think I mentioned before, right? We all exit one day. So if somebody is really not taking this part aspect of business seriously, then that's what I want to tell them. The second is the fun part, that how can they enjoy the journey? And that's my job, to make it enjoyable for them as much as possible. So burnout is not even in the dictionary. You have to not even just be peaceful, right? I want to have fun when they're building this. Then they build really amazing things. So yeah, that's my, and I had to learn so many things with so much of hard work and errors and trials and whatnot. If somebody can help you just, navigate with so much ease, why not? You should always grab that hand and take advantage of that. And second part, where I live on LinkedIn.
Yeah.
So that's first.
Yes.
From there, you can also look at my newsletter,
Yes.
and I send out weekly. Last Thursday was the 63rd edition. So again, more than a year I've been building that and sending out every week some system, some framework, some tool. They are very 3-4 minute read and very tactical in nature. No gyan, no fluff. And yeah, website with my own name, surabhishenoy.com. But yeah, LinkedIn is, I think, DM on LinkedIn is the easiest and quickest way.
Okay, great. So Surbi, that's a great conversation with you, and we went on very depth thing. So looking forward to connect you more for some good topic. So thanks for today's presence in my Venture Unlock podcast. Thank you.
Thank you so much, Shivam. This was great fun. Thank you for having me.
Yeah.
Bye.